Hey, welcome to Real Job Optional Freedom. Real estate can be complicated. Let an investor guide you. We're here to demystify the complex nature of real estate by getting you answers from professionals who are in the trenches so you can be the hero of your real freedom story. Welcome to Real Money, a weekly segment of the Real Freedom Podcast where we ask the most pressing real estate questions. And with me today, I've got a co-host, Kevin Gilbert, and I am Chris Bell. And one of the things that came up was we have been applying for rent relief from tenants and going through that process, trying to work with folks. And Kevin just was sharing with me an interesting story about rent relief that he had applied for uh, over a year ago, it sounded like.
Yeah, some of these stories might scare you off from real estate, but you got to remember that um, this is probably less than 5%. So I have like 70 properties, manage a bunch of properties, and there's just a handful of people that fit this category. So before I tell this story, I just want to qualify that with this is not everybody. This is more the exception than the rule. But I did buy a property a couple years ago. I said late 2019, and put somebody in the property. I think no, I must have bought it. It started 2020, so put them in right as the pandemic started, and never got a dollar from them. Literally, the funds received when they moved in were the last funds we ever saw from them. But they did do the paperwork and fill out for the rent relief, and March of 2021, they were approved, and a check was in the mail for $7,800. Uh, we again never received a dollar from them. They continued to occupy the property with 6 dogs and 2 rabbits. And they were not walking these pets; like they were in the house. Like it was an interesting experience walking through the building, but they were removed in December of 2021, and yeah, I actually sold the property in January. So while I was making mortgage payments for 2 years, I did recoup those costs, but we can tie that more to how the market's gone in the last 2 years than anything. Well, a couple days ago, a check. Now it's March 2022. A check from the government came for $7,800 a couple days ago. So literally 12 months after supposed issuance, um, that check showed up. Now we have been getting other checks, and other people have been receiving funds and rent relief, and it's shown up in a timely manner. But the fact that a dollar was never received from these people, and the problem had already been resolved 12 months after we were supposed to get those funds to help take off the pressure of making these mortgage payments and letting people stay in the property. It did take 12 months.
So, Kevin, I think anybody listening to this would probably ask, you put somebody in a property and right from the start they didn't make any payments. What kind of qualifications were given to these people? What are you looking for there? And why is this such maybe an anomaly with what you're dealing with?
Well, yeah, everybody's got different credit standards, and credit standards are very important. The credits, if your credit standards are lower, I've personally noticed that, like, you're chasing money more. Like, people with bad credit don't pay timely, but rent is still something you need. So I don't know that the eviction rate is necessarily higher in general, but the timeliness of rent payments is definitely, yeah. I mean, think about it this way: like adults handle their money and they budget and they pay bills. Children, you have to like yell at them and tell them it's bedtime, right? Like, so think of the people with the bad credit as you start to run into a lot of people who you almost need to like call and badger them and be like, hey, you got to pay your rent. Hey, you got to pay your rent. Hey, you got to pay your rent. And so we get a lot of people who are just notoriously late. And when you sit down and do the math on the late fees and the penalties that they pay, it blows your mind. You know, being irresponsible with your money, it costs you a lot. But yeah, so I don't know that the eviction rates are too different, but definitely the consistency of online pay is different when you're looking at you know where you set the bar for requirements for credit checks and all
And
that.
did it take an entire year to evict this person? Is that a normal like process? Is that normally how long it takes to get somebody at your house when they're not paying? I mean, that sounds
Right.
ridiculous.
So yeah. So I mean, it's the government's not a big fan of just taking families and putting them on the streets. So it's always a process, and depending on what your state you're in, it's anywhere from 45 days to, good Lord help us in New York, you might be looking at 9 months. So the government does get involved when you start saying things like we're putting families on the street. So there is a process there, and everybody wants to give the family a chance to hold up their end of the business agreement, right? So there is a process. Before COVID came along, it was a consistent process that landlords could budget and plan around. Once we were in a pandemic, everything changed. We were actually told one judge, not telling us personally, but pretty much said in a courtroom, says, "I'm not going to be on the 10 o'clock news tomorrow. Like I'm not, and they were you know, just making it up. Like there was no laws being followed, there was no rules being followed, and then the rules were changing on a daily basis at a period of time. So we did run into this area where they were just saying, "Hang in there, landlords. We're sending funds." But if you got one process and if you got one rental property and you're on, you know, if you're on a tight budget and living paycheck to paycheck yourself, you know, there is no hanging in there, right? So you do need to have a plan and have those emergency funds and all those plans in place. So,
Yeah.
but in general, like it is something you can consistently do. Just the last 2 years, it's gone haywire, and it is something that you should be able to plan around. This is a investment in business for many people across the nation. And to be honest, you know, this also falls into the category that the government knows that they don't do well and they don't want to be in charge of. you know, Government housing is a train wreck anywhere in the world you look, right? And the government is aware that private individuals will do a better job than they do. So they want this business to work. But in the last 2 years of the pandemic, it's gone haywire. But we are starting to see things get back to normal a little bit, I think.
So I wonder if this is, as a from a landlord standpoint, we had the 07, '08, the housing crash, right? And I think a lot of people looked at that as kind of this black swan event, like, nobody could have known it was coming. I don't know if that's necessarily true looking back on that, but I look at this and you go, hey, the government put moratoriums on evictions, and several states have extended them out now for, upwards of 2.5 years. Um, and I wonder, would you consider this to be a black swan event as a landlord where all of a sudden you've got to pay a mortgage and you are not able to collect rent for a year or 2 years?
So that's an interesting thing because real estate education all over the place. It's leverage, 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 and there's power there, right? There is some serious power to doing basically arbitrage, right? You get this huge asset, and you're using borrowed money from the bank, and somebody else is paying that mortgage off, right? That is valuable stuff. But these black swan events, they keep happening every 10, 20 years. I mean, you kind of need to plan for that, right? You do need a certain level of cash flow. You do need to, like, personally, in 2008, I hit a point where about 50% of tenants just stopped paying. So in my brain, that's kind of like, on a big scale. that's something that's hard to punch into your calculator, right? Like how do you calculate for risk when you're talking about this arbitrage stuff? And that's big risk, right? So if you're building a portfolio of properties, whether it's 5, 10, or 100, um, I think you do need to think about, like, do I have the cash reserves to go for a year or 6 months or whatever the time frame you decide you're comfortable with? Do I have the cash reserves to go for a certain period of time with half my tenants paying, right? Now, um, that's not normal, right? And half the tenants not paying didn't last forever, but I mean, everybody's going to have a different comfort zone there. But it's when you're playing with the calculator and trying to calculate how to maximize your returns with real estate investing, where's that button? Where's the oh no button? Right?
Yeah, I
So
think, that to your point, right, with the calculator and the spreadsheets and the this is what it should look like on paper. Um, oh my gosh, I've made millions multiple times over on spreadsheets and on the calculator, and then, you know, literally, tried and true in the trenches. It never seems to work out the same way in real life as it does on paper. And I think that's, one of the lessons that we're trying to bring to people is, there's a real world out there. You're dealing with human beings with the basic necessity of shelter. They're exchanging their valuable money in exchange for that shelter. And, on paper, it's a home run every time, right? But in the real world, you know, it doesn't happen that way every time. Maybe your law of averages are going to give you better results. But I think that's where you look at if you're invested in one property or one unit. It's kind of this all or nothing game, and I think that's where you really start to hear some of these horror stories about owning rentals and so on and so forth. And I think it's why a lot of people, if they're looking at that, they hear the horror stories, they hear about the single owner owning one unit, and so they start to look at multifamily. Well, then you look at multifamily and you go, hey, I can't afford to buy the 100-unit apartment complex, but I can afford a duplex or a fourplex or an eightplex or whatever the unit count might be. And so you start to say, well, that's definitely better because all my eggs aren't in one basket. But um, it's still very difficult to pencil out the, hey, 50% of the tenants decided because something happened in the world that they're not paying this month.
what's really interesting about that is, when you have one rental property and you have a vacancy, you have a 100% problem, right? If you got 10 and one goes vacant, you have a 10% problem. And it's dramatic how, like we I just told this story, and in my life it's not a big deal, but if that was my only property, you know wow, right? um, but you say that, and the returns on this still drastically beat returns where, like, you talk about the speed of money, and real estate to many people is boring and it's slow, and it's not as exciting as day trading, right? But these returns are fantastic, right? Like, if you're looking for a reliable, statistically proven plan to develop wealth for you and your family, and to not to be able to get out of the grind, like, this is valuable stuff. But um, and it's not rocket science. Like, one of the things I do love about real estate is I know some very dumb millionaires. Like, I know some people who, you know, they're not that bright, but they consistently stuck to the plan, right? Like, it doesn't require rocket science or math degrees, but if you stick to it, the returns are the returns are great. And even with these stories, right? So it does require work. It does require some thought and some commitment. And I was literally this morning talking to a guy who's trying to pull the trigger on his first rental property. And oftentimes that's the hardest one, not because, of anything other than the stuff in his head, right? It's scary. These are, these are not, $100, you know, thing down the corner. Like this is a big commitment, right? And if you're borrowing money, you know, you're not borrowing $1,000. You're borrowing some number that's willing to scare you, right? If you want the returns that you can feel, if you want a return that you can feel, you might be getting into a project that you're going to emotionally feel, right? So that does matter, and that first step can often be the hardest. So, but God, the returns are phenomenal.
Yeah, absolutely. I think you step back and you look at some of this stuff and you go, well, um, how did you make that first step? How did you overcome that that mental block? I think for some, maybe it was reading a book or having a different mindset on things, just kind of maybe that paradigm shift. I think for others, maybe they're in the corporate grind and they're realizing that, what they've been told and educated on forever, um, it's not coming true and they're not seeing how it's going to pencil out and they're coming to grips internally with maybe the information they've been given is wrong. uh, and I think that's a pretty interesting place to be when you start to get older and you start to question some of the authority and some of the knowledge that you've gained and you go, "Oh, wait a minute."
So I was talking to a banker earlier today, and he's properties, all multifamily, in Suffolk if you're local. But he's got multifamily and he's looking for one more. And I'm like, yeah, you say that now, but as soon as you get one more, you're going to be looking for one more, right? So we were talking about that and talking about his strategy, and he's raising the rents, right? So he recently bought a property where people have been there for 30 or 40 years, and he was telling me how he started the conversation of, "Hey, your rent's half of where it should be. It's $600. Nobody pays $600, right?" So he literally did printouts. He did all this stuff, and when had a conversation to raise the rents. And he was telling me about his job. He's a banker. He's a pretty high level banker. Like he's not a teller. And he's telling me about this conversation where he's having these meetings of where 250 people gather every quarter, and you know he started talking about like how important he thinks it is gets dramatically and correspondingly reduced as he gets more passive income. And it cracked me up. And I'm like, wait until you hit that magic number where your passive income is more than your earned income. You're gonna stop caring about the meetings. And we were having that conversation earlier today, and it's hard to tell somebody just how magical this stuff is. But uh, I was we were having a conversation about the emotions that he was having around that, right? It's one thing when you're living paycheck to paycheck to have a boss tell you something you don't like. It's another thing when you have passive income, you have way more options, you're way more in control, and that fear of losing the job, it goes away, right? It's kind of magical. So yeah, the returns are phenomenal, and they'll make you large sums of money, but man, it's nice to be in a place where you're like, I need to wake up every day and like what I'm doing most of the time. And if not, am I a prisoner or can I go find that somewhere else?
Yeah, absolutely. I think one of the interesting things I heard Robert Kiyosaki say recently, somebody was interviewing him, and he basically said, people get it all wrong. They say, you have this business to have freedom and, do all these great things, and that's why people get in business. And he said, uh, your business should fund your real estate, and your real estate is what's going to give you freedom because of that passive income. And, when you say passive income, people get this misconception like you do absolutely nothing and money just shows up in the mailbox. Um, like because of the better returns, the tax advantages, the leverage and all of the benefits of real estate, like there's legit work that goes into owning real estate. It doesn't mean you've got to be the one that does all the work, but into getting those returns. And I think so when you hear about it being passive, it's not a 401k where you're just magically dumping money into something that the financial guy told you and hoping for a better day in the future. Like you have to be involved. You have to care about your money. Um, you know, so it's
Well, even that, there's a comfort zone, right? Everybody has a comfort zone. Um, if I'm a doctor and a passive investor, my properties might be way more high end than me or you would choose, right? The returns might be greater for us, but the work level will be increased with those older properties or the more, I don't even want to call them low end, but the more affordable or working class properties, right? Um, so everybody's got a different comfort zone, and you're going to see different returns. But even within those space, like even if you pick a comfort zone, you can personally choose. Like that guy I was talking about today, he was telling me about, you know, he's buying his own water heater, and he didn't say he was installing it, but he's probably standing there next to the guy while he's installing it, right? So that's a very active level, hands-on approach. I don't do that. I'm not standing there watching or helping install a water heater. So you talk about it's passive returns. Like you don't need to get up in the morning. Those checks should be coming every month. You're going to see money come up, and it's not tied to how many hours you put in, but also like your own comfort level can get involved, right? You can be 100% passive, and you can still beat your stock market averages. It's up to you. Like, I get some phenomenal returns, but you know, maybe I'm a little more active on those projects, right? Or I still get returns that, when my sister's a doctor and her husband is also a phenomenal, highly paid employee. When they talk about stuff, it's just very alien to me because their returns and my returns are very different, but their stuff is through various institutions, large scale stuff while they're at work, and it's hands off stuff, whereas mine's more hands. Like as an example, if I want to take a house and add value, I can add value. I can put on a new roof, new siding, new windows. I can change the value of that house. Now, I may not be able to change the entire neighborhood. I can't pick the house up and move it without spending way more than makes sense. But I can influence heavily the value of that property, right? A stock like Apple, there's nothing I can do to change the value of Apple. I can't go in there and yell at the board meetings. I can't make suggestions. They're not going to listen to me, right? I can't make a difference there. I am as passive it gets if I buy a stock like that, right? So, you get to determine your own future there, and that's one of the things I really like about this. Not only do you have a degree of control that you're comfortable with, you can sub out the management, the maintenance. You can sub all that out, or you can do it yourself, which I don't recommend. Um, but a stock portfolio, you can't do that. Your choice is passive or passive, right? You just don't have as many options. And then on top of that, nobody's going to lend you 80% of the value of the stock. Like, it's not going to do that. And if they did, everybody around you would think you're an idiot, right? Like, it's very risky. Whereas it's common with real estate, right? Like, I'm big on paying them off. I'm big on, having an emergency fund to cover black swan events that happen on a regular basis every decade or two. But even with that, I love this stuff, and it's amazing the life and opportunities it presents to people. And money's a tool; it's a valuable tool, and the more you accumulate, the faster you get it to grow. It's amazing how you get to help and where you get to put that at, right? Because we don't do this because we all want to die with the most points. We do this for what's important to us, which is different for every person. Is it your family? Is it your freedom? Is it your health? Is it Is it time? What is it? And it's going to be different for every person, but this is a great avenue that we have to go forward and accomplish that. So, man,
Yeah.
I love this stuff. I'm excited about it. I'm always excited about it.
Yeah, I think one of the really cool things with real estate is, um, you make money when you buy it, right? And I think that's a misconception. Everybody's trying to, make money when they sell it or, make money when they rent it. But really, if you understand real estate, you make money when you buy it. Just understanding what needs to be fixed in a property, what the real value is, what the rental value is, and are you buying this property below market value? Or, are you going to get, you know, potential appreciation there? Are you going to force appreciation because you're, adding bedrooms or anything like
So,
that?
so let me give you an example of that. I ran across a property a couple years ago, and I called an agent buddy. Right, you money when you buy, and I want to almost like call the lie of that out. Like it's very true. If you can get a deal, you know, you're making dollars right there at the start. Like when you buy, you definitely making money. But I ran across this property, and I called an agent, and he's like, it's worth 30 grand. It's the guy wants 30 grand. It's worth 30 grand. I'm like, well, the houses around here are 200, and this house is just, it needs a lot, right? So um, it was I felt like I was paying full price, but it was so freaking cheap. I'm like, I got to figure this out, right? So I told the guy, I said, look, I need to give it 30 grand cash, or I can finance it. You finance to me, I'll give you 42. So he agreed to $700 a month for 60 months, right? And that was just a couple of years ago. Um, and talking about selling that house right now. Now, like things went up, things appreciated, right? Time went by, right? And I'm looking at. I think I owe like maybe $14,000 left, and I'm about to sell it for 87,000. So, and what happened other than time went by, right? Market appreciation. I was making money every month, but it was probably 25 bucks a month, right? So, yes, you make money when you buy. Yes, that is incredibly important. But man, real estate's one of those things where you know everybody talks about the stocks. If you stay in the stock market, just stay in, stay in, stay in, and you win long term. Well, that's true of real estate too, right? Like oftentimes the value is like right now the value is in the interest rates. You can go pay full price, and at these interest rates, it cash flows. It cash flows, right? And even if the market takes a drop in the next year or two, if it drops 10, 15, 20, 30%, but you locked in a rate at 4%, you're still going to cash flow, you're still going to survive. And 20, 30 years from now, you're going to have a cash cow. You're going to win because time went by, right? So every part of the market cycle, there's different valuations and different methods of winning. Like the cycle changes where the win is, right? But boy, time beats all with that stuff. Like it's just incredible. So that's one little example that just kind of came across my plate, uh, where time kind of wins, right? Like in the moment, uh, that was not a deal. That was full price for the house, kind of thing, right? Um, but you know, time wins. So
Yeah, I think you stack the win on top of that by creative financing on the property. So, that's extremely important, and that's all done on the front end of that deal. Just a really cool example. One of the other things that you mentioned, Kevin, was the low interest rates, and I think you and I have talked about this before, and so many people are saying, "Oh, the house is so expensive. The house is so expensive." Um, but really, where you could look at things and look at it a little bit differently, the investment is trying to get the 30-year loan at 3% because, hey, look, the math doesn't lie. If if you buy a property at, I don't know, let's just call it $200,000 at a 3% interest rate on 30 years. You're hedging inflation right off the bat at 3% on that 30-year fixed mortgage. And, our current CPI is somewhere around 8%. So, I mean, you're making 5% on the $200,000 house right out of the gate. But then, what people fail to realize, they go, well, they're so worried about the drop in the market or the crash in the market. So you can pencil this out. You go, well, okay, well, what if the market dropped 25%? Like, what if? So what if $50,000? What if that property came down in value $50,000 and was now only 150,000? Well, you can pencil in a 30-year interest rate of, oh, let's just call it 6, 7, 8, 9%, which, the 200-year average of interest rates is like 5.25%. So we're probably going higher than that. And you can look at what the payments would be and which property over time, total interest, total principal paid, would be cheaper. And depending on the interest rate that you put on the $150,000 house, and assuming that you're taking out a loan on it, um, the house bought at a higher price with a cheaper interest rate is ultimately going to be a cheaper, better investment long term, which is crazy.
Yeah, they always say the best day to buy real estate was yesterday. Well, if we have a market crash and interest rates go to 8%, they're going to be like, well, it should have been yesterday, right? And everybody's like, the house values are so high, the house values are so high, but they're also, on the other hand, you know, I don't know that this is actually going to happen, but they're talking about $30, minimum wage, right? So it's like I just paid $10 for a cheeseburger, and that seems high. But 10 years ago, it was $1, and that would have seemed high to the people who were used to paying 5 cents or a quarter decades before, right? So the, you got to remember, we were just talking about, the inflation rate on your dollar, right? But our brains get fixed of like when did you start driving? How much was gas? Well, compared to that, these prices are ridiculous, right? And when did you first buy a house? Well, compared to that, these prices are ridiculous. And what we got to remember is that we as human beings, we have our own benchmarks, right? We see the world through our own little personal lens. And the dollar is really just a useless counting system that we use to try and get valuations, all this stuff, right? So every time inflation comes along, it messes us up. So you really got to sit down and look at that math and not talk about dollars, but talk about percentages and returns. And you gotta actually look at it without the dollars. You got to be like, all right, am I getting a 5% return, a 10% return? If I factor in tax benefits in this, am I getting close to 18% return? What does this actually look like? And don't put a dollar on it, right? Because otherwise, you're going to scare yourself out of a deal. You're talking about multifamily, right? How do people do deals for $1 million, $16 million, $60 million? Well, it's because they're looking at those returns, those percentages. The dollar is irrelevant, right? And that's how you get into the big projects. Is that you're very familiar and intimate with the math, and you know exactly what kind of return you're getting. Not just cash on cash, but an actual return, tax benefits, and all included. So.
Yeah, I think that's important, Kevin, is to just understand that the dollar is basically this accounting system, and the American dollar, U.S. dollar, is the world's reserve currency, but it's literally been going down in value. I think it was since early 1970s. When Nixon took us off of the gold standard. Our monetary system has money has been being devalued. So a lot of times when people say, "Oh my gosh, the price is so much more," it's not necessarily the price, it's the dollar is worth less. And really, because so many things in our lives we try to anchor to a price or a dollar symbol, it's really difficult for us to understand that the thing didn't actually go up in price. It's our money buys less. So we have to spend more of those dollars to get it. And That's a really hard concept considering, U.S. education system and,
Also, a lot of people like it's a big transition. A friend of mine just had this transition the last couple of months where he started realizing he no longer looks at it as dollars. Like he's like, I'm not going out to eat because that's 4 hours of work. You start looking at things differently, right? And it's not a big leap to go from, man, my car just broke. That is literally 2 days of work, uh, of my time just thrown away, right? It's not a big leap to once you switch to that mindset to also switch to the value of passive income starts to show up, right? Like it's not once you make that first leap of like my time is precious to me and this stuff is killing me, right? This stuff is to suddenly switch to the next step, which is you're not even looking at anything in a dollar perspective. You're looking at it as time, and if you can get enough dollars to completely free up your time, that's real freaking freedom right there, man. And you know, I just I want all my loved ones to see that, and it's hard to force on another. It's easy when your own light bulb goes off, and you surround yourself with other people who also had the light bulb go off. But there's a 17-year-old in my house, and her light bulb is not going off, and no matter how much I force it or try, it's a fight, right? But when you yourself start to realize um, that we're not here for dollars, we're here for what they bring, right? It's the tool, it's the hammer, it's the nail, it's the thing that lets us build the life that we're looking for with the loved ones we're looking for. So
yeah, because that's what's there's a famous marketing saying that says, um, like the they don't like nobody goes to Home Depot to buy the drill or to buy the drill bit. Like they wanted a hole in, something, so they had to buy the tool that gave them the hole, right? So I think when you start looking at like people want to retire, they want to have financial freedom, they want to have time, they want to have all these things. Well, some of the traditional ways that we have been told are going to give us that proverbial hole. Um, it's the wrong tool. And I think, once you start to realize and pencil it out and understand that, um, society, our monetary system has got a huge uh, benefit to basically sell you that idea, the 401k, the stock market, to basically give all of your hard-earned money to them, and they're gonna, give you some rate of return. I think, um, and you don't get tax benefits with it. You don't get leverage with it. Like you've basically been sold the wrong drill. It doesn't mean that that drill won't work, but it's not going to get you the hole that you want.
so uh, and you don't have as much control, right? It's you know I don't know. I'm a huge fan of this stuff, and it's phenomenal. But it is all about those numbers, and you got to figure out that rate of return. So um, you know, it's take control of your own destiny kind of stuff, right? So
Yeah, absolutely. So, guys, if you've been on the podcast today, we appreciate you. Want to welcome you back for another one, our next one that we're going to be doing here coming up shortly. And we're all things real estate and all about your future, uh, future freedom through real estate. Take care.